Hi, and thank you for stopping by my daily market report. And I am Mike. My report is on mortgage rates. We talk about what's impacting them on a daily basis. We do touch a little bit on stocks. We don't necessarily go into actual interest rates because there's a lot of websites out there for that. I just kind of talk a little bit about what's impacting them, if they're going upwards or downwards, uh, stuff like that. So without further ado, let's jump right into it. We'll start off with the economic report today. We got one item here, and that is the NFIB Small Business Index. This is kind of an index from the small business owners on their confidence level for the economy. So the previous report back in January was at 95. Forecast calling for 96.5, and it came a little bit higher at 95.8, which is obviously very good news. We want to see good news from small businesses, primarily because they do make up the bulk of the employment out there in the economy. Let's jump ahead here to the headline news, and stocks are up today. They are taking a cue really from yields. Yields have been up quite a bit. It's been creating a big stir with the spike in yields we've been seeing, and as we'll touch on in a little bit, they did drop a little bit. So just a little prelude of spoiler alert of that. So we'll touch on that. The House is expected to pass this week, maybe even as soon as today, the revision to the stimulus bill, and that could get looks like it's going to be moving forward. So, anyways, as we know, Senate passed it over the weekend. Now it's back to the House, and there's speculation they could try to get rapidly moved through the House, and maybe again as soon as today. And then, of course, Biden will sign off on that. Let's jump ahead to take a look, see what's going on with mortgage rates. We're way up here. We're up at about 25 basis points. So those lenders who priced out early may have given us better pricing. It was actually up about 25 basis points, which would lead to better pricing. However, just recently, last few minutes here, it just pulled back, and now we're down only up 8 basis points. So it depends on which side you are. On the East Coast, you're probably going to see some better pricing. On the West Coast, depending on the lender you're with or viewing, if they priced out East Coast, they may still have that pricing in, but it could come into a price change if this trend keeps continuing here. So just something we'll have to kind of watch for if this continues right now. Let's jump ahead. Here's yields. Yields are at 1.56 after touching about 1.62 yesterday. It's pulled back. It's down to about 1.56 right now. It started off this morning even lower, down about 1.55, I think it was, or 1.54, and then just went recently up to about 1.56. So that's what one's up. So to touch on the yields, they're taking their more. It's affected more than high risk ones like the tech stocks, and that's why you're seeing some readjusting of in the stock market. So people are taking the money, not necessarily putting it in bonds or securities, which you will see that probably coming up soon, but they were readjusting it to other maybe stocks that are going to fare well in a higher yield rate environment. Like banks typically make more money in a high yield rate environment, and so they're putting those into financials, and also you got energy as well. So in this, when I touched about yields, we're also hearing about some. There's going to be some talk probably coming in the near future where, like for example, in Japan, we got some big pension funds. They may want to reposition their funds into something more secure, like a high yield here. U.S. has got one of the highest yields of the G7, and they may be buying into our yields, which could help us out, reduce it, and help out mortgage rates a little bit further if they creating a buying frenzy at some point. So this could be something you may see another month or two down the line here as their year end ends. This is some speculation I'm hearing about on the sidelines, and that's something that could help us out later on. So um, that's pretty much the wrap. Again, rates are right now either unchanged or a little bit better, depending on when the lender came out with the rate sheet. So again, it depends on the lender. If they're on the East Coast, they may have already had in the better pricing, but they could be coming back down if this continues. If they are here on the West Coast, most likely the rates will be unchanged right now. Now, if you guys got any questions about anything else, whether it's mortgages or interest rates, or you guys want somebody to look at your refinances or your purchases, please feel free to reach out. A little bit of background about myself. I am a loan officer, and I do work with National Lender, so I can help you with all those aspects as well. You guys have a great rest of your day. Thanks so much for watching, and I'll see you in tomorrow's video. Bye bye.